And welcome. This is the fifth episode of Investment Strategy Second Wave series. Well, I would like to thank everyone for the good response to all the episodes of my series so far. Only two stocks in a series because we are covering the stocks in detail. We are talking about everything. We're looking at the balance sheet of the stock in the company. So that's why it's become a little long. So this series, of course, I would like to add is that the stocks which I'm going to tell you today, they are from different segments. Okay, one is a FMCG company and the other is a finance company. These two stocks also you might have heard. Definitely you might have heard, and now is the right time. If you still haven't bought them, please buy them. Shown good performance in the last 1 year, 3 years, and 5 years. So they are, you can say multi-baggers. Pandemic affected them, but not in the way as, the pandemic affected the other stocks. So these two stocks are, one is an FMCG company. It's called the Hindustan Unilever. Definitely you must have heard. We use so many products from this company. Making this video on 11th May. Okay, a 52-week high of 2,505 rupees. And 52-week low was 1,955 rupees. It closed today at 2,409 rupees. Okay, so as soon as the stock falls, grab it. Okay. Also, if we look at this company's overall performance, the PE ratio is around 70.83. Dividend yield is 1.29. Hindustan Unilever is a FMCG company. It's headquartered in Mumbai. It includes foods, beverages, personal care items, cleaning items at home, a lot of things. So, and yes, because it is an FMCG company, so like ITC, this will continue to do well because we all consume food, we all clean our houses, we all use creams and all that. But this is the reason why they are picking it up. Okay. So now if you look at the company in detail, the market capitalization of the company is 5,64,471 crore rupees, and face value of the stock is 1 rupee. ROE is 29.2%. ROCE is 39.2%. Okay, stock PE is around 69 or 70. 1 year ago it was around 2,048. And now we all know it's around 2,402 rupees. So it has climbed in 1 year. We all know that, I'm just making this for 1 year strategy wise. But I think so far the stocks that I've told, they can fit in that 3 year period duration. You should invest stocks and kind of thing that they fit into. But again, we are talking about 1 year. We are in the middle of a pandemic. Okay. Grim scenes on the television and in news. So we're talking about 1 year. Okay. So in 1 year it has climbed. In 3 years also it has climbed. Okay. Company is debt free. Company has good return on ROE. For the last 3 years, it stood around 48.82%. Okay. The company has been maintaining a good dividend payout of around 95.52%. Cons are that the company has delivered poor sales growth of 7.88%. Promoter holding has decreased in the last 3 years, but still the promoters hold a big share in the company. Stock is trading at 11.84% of its book value. Okay, now if we compare it to its peers, well, it stands very well above everyone in terms of PE ratio. Okay, it's around 69.05. And ROCE, it's just below P&G, that has 58.30, but this has 39.21%. Okay. Colgate Palmolive also has higher, 67.41%. Okay, we are only results. If we talk about operating profit has gone up from 2,319 crore rupees in 2018 to 3,042 crore rupees in 2021. Profit before tax was around 2,446 crore rupees, and now the profit is around 2,888 crore rupees. The net profit has also gone up 1,565 crore rupees in 2018 to 2,186 crore rupees by March 2021. Operating profit was around 7,405 crore rupees in March 2018, and now it is around, by March 2021, it was around 11,625 crore rupees. Profit before tax was around 7,306 crore rupees in March 2018. From there, it has gone up to 10,605 crore rupees. So net profit has gone up from 6,054 crore rupees in March 2019 to 7,995 crore rupees in March 2021. Consistently grown. Okay, liabilities, they have gone up from 17,862 crore rupees to 68,757 crore rupees. If you heard me right, massive jump. But the company has got into more products. It has grown rapidly. That's why the liabilities. But don't look at that. If you look at the profit before tax, after tax, net profit, they have all grown. ROCE, if we talk about, has come down. It's around 39% in March 2021. And it has been maintaining an over 100% ROCE, prior to that. In March 2018, it was around 103%. March 2020, it was 117%. So that has come down a little bit. Maybe the pandemic affected it. Now, if we talk about the shareholding pattern, okay, promoters hold 61.90% in the company, 61.90%. That's important. FIIs hold 14.95%. Public has 12.47%. This chunk is held by the promoters of the company, and that is the biggest plus point for this company. Okay, so this is Hindustan Unilever Company. Okay, now we talk about Bajaj Finance. Bajaj Finance share was also down today. It was around 5,423 rupees. Today on 11th May, it has come down, as compared to day before. And we all know it's a subsidiary of Bajaj Finserv, an Indian non-banking financial company, NBFC. Okay, so they give loans. Okay, the company deals in consumer finance, SME, and commercial lending and wealth management. Now, if you know SME, okay, small and medium enterprises, and they were given a big push by the government in the budget. So this has also, the stock of this company has gone up. It has seen massive demand for loans from small and medium enterprises. That's why the share has just gone up. If you look at its 1 year trajectory, well, it has gone up from 2,069 rupees in May 2020 to this 5,423. Okay, if you look at its 5 years trajectory, well, it has again gone up. 5 years ago, it was around 762 rupees per stock. Wow, what a growth. PE ratio of the company is 74.29. Dividend yield is 0.18%. Founder of the company is Rahul Bajaj. Headquarters is in Pune. Subsidiaries are Bajaj Housing Finance Limited, Bajaj Financial Securities Limited, Bajaj Finance Limited. Company's detailed balance sheet. Market capitalization of the company is 3,27,474 crore rupees. Stock P, I think I told you. I'll again say it's in the balance sheet 74.1. ROCE is 9.32%. Now, ROCE is an area of concern. But this is a finance company, okay? And the times are not very good for finance related companies and things. But they are good also because people are taking more loans. But then there is a chance of increase in NPAs. Okay. So ROE is around 12.8%. Book value is 612 rupees. Face value of the stock is 2 rupees. Okay. Now, if we look at its pros, where the company has delivered good profit growth of 28.15% CAGR over last 5 years. As I told you, the stock has consistently grown. Stock is trading at These are the cons, 8.87 times its book value, and company has low interest coverage ratio, comparison with its peers. Well, now Bajaj Finance stands at around number 2. SBI Cards is at number 1 with 92.80 ROE. Bajaj Finance has 74.09. I told you its ROCE is 9.32 only, whereas Bajaj Finserv, its other arm, has 11.80. That is also a good stock. Okay. HDFC AMC has 39.93% of ROCE. Well, great. Okay, now we'll talk about Bajaj Finance. Bajaj Finance is a stock in news. It is a stock recommended by experts, and it is a stock which is backed by even the foreign investors. We'll look at the FII's pie in this. Quarterly results, where financing profit is around, has grown from 1,325 crore rupees in June 2018 to 1,908 crore rupees by March 2021. Profit before tax has also gone up from 1,297 crore rupees to 1,823 crore rupees. Net profit has also gone up from 836 crore rupees in June 2018 to 1,347 crore rupees in March 2021. Well, if we look at its NPA, which is a finance company, so 0.44% was the NPA in 2018, and now it is around 0.75%. Okay, that's not a very big amount, but the NPA has grown a little bit. Okay, financing profit. Well, if we look at it, it was around 3,935 crore rupees in March 2018, and by March 2021 it has grown to 6,303 crore rupees. Profit before tax has also gone up. Well, 3,843 crore rupees was in 2018 to 5,992 crore rupees by March 2021. Net profit of the company has gone up from 2,496 crore rupees in March 2018 to 4,420 crore rupees in March 2021. So the profit before tax, financing profit, net profit, all have gone up. That's why the stock has been rising. Now, total liabilities of the stock has also grown, of the company has also grown from 84,798 crore rupees to 1,71,527 crore rupees. Now, these are consolidated figures. Okay, if we talk about ROE, well, ROE has come down from 20% in March 2018 to 13% in March 2021. But it is giving returns, okay? And this despite the pandemic and despite the grim situation we are seeing all around us. Promoters hold 56.12% in the company. FIIs hold 24.06%. So that's a considerable chunk. Public holds around 10.57%. Okay. FIIs are that's why backing this stock. This is a wrap on this episode of Second Wave Strategy series. And definitely I would be coming up with more stocks because there are many other stocks. You can definitely pick and choose from them. You can maybe choose stocks which you have heard most about. And there are some stocks which are absolutely safe. You can put your money and you can forget about it. They are in the model portfolios of many experts and many of these stockbrokers. So most of them, actually all of them are in that, except a few. So when they are there, I tell you in my videos. So well, this is a wrap here, and I'll see you in my next video. Bye bye.